Quick disclaimer, this video is for educational and entertainment purposes only. I'm not a financial advisor, and nothing here should be considered financial advice. Always do your own research and understand the risks before investing.
Welcome back, everyone, to another Bitcoin update. So getting quickly started on the daily, pretty much the same exact thing that we have been tracking for pretty much this whole entire month of February. I mean, it's just been sideways chop, super boring, frustrating, and annoying. It seemed like yesterday we did have a somewhat promising move until we have had this correction, and right now it is only a 3-wave move to the downside, but it could be possible we could be in a 4th wave, and if we get one more low below this level at 66,600, I believe it was, whatever the low is in this bottom over here, then that would complete a very small 5-wave move to the downside, and that could be a indicator that we are going to be heading lower and still ranging, and that this wave up was just a 3-wave impulsive move, and now we're gonna keep going sideways. So our main scenarios that we have for right now is whether this A wave has bottomed right now on the February 5th, or we're going to be going for a extended A wave. Either way, we are expecting a corrective bounce. It's totally possible it can be a more structured 5-wave move up bounce, but we're just expecting just more of a corrective bounce. Once we kind of start this bounce and we get confirmation of it starting, then we can start to determine whether or not it is just a corrective bounce, or whether it is just or even a new good structured 5-wave move up for a new all-time high. Based off of us going sideways for this whole entire month, well, it kind of leans towards the direction that it will just be a corrective bounce. Okay, we haven't seen anything crazy, we've only seen sideways action. So what this would look like would be A, B, C in A wave, A, B, C in a B wave, and then a 1, 2, 3, 4, 5-wave move up in that C wave before we can get that correction and head lower, because all of this would be a part of a larger degree, A, B, C to the downside, where that C wave could, not guaranteed, but could mark a bottom in a supposed Bitcoin bear market. So that's kind of what we're tracking. So whether we break below this low at 60,000 and we go for another low before we start that larger degree A, B, C and get rejected, or whether we bottomed out right now, that's kind of what we're tracking. So our indicators for what we will want to be looking for to see whether or not we have bottomed or not, sorry about that, would be depending on this rally that we're in right now. Or sorry, not depending on this rally. It would depend on swing lows and swing highs. So if we break below this level at 62,638 at this low, becomes more and more likely that this A wave is going for an extension, and we get a confirmation of that as soon as we break below that 60,000 level of that low back here. Our first indicator that we are indeed in that C wave for that A wave for a more impulsive is, first we need a break above this high at 70,000, and then one more at this level at 72,000. If we get a break above both of those swing highs, well, then it is more confirmation that this C wave has indeed started. And our goal, or I guess our price zone for the C wave would at least be within this swing low and swing high between 79,000 to this 72,000 level. That would be a ideal target for this A wave or this C wave and an A wave. It can always extend. So if we do see a extension, assuming that this A wave already did bottom, if we do see that extension, then shouldn't be surprising as well at all. This is just kind of a basic indicator for this as well. If you've seen some of our other videos, we go into that larger resistance zone for what that B wave corrective bounce could possibly hit. And our main, I guess, our basic goal and plan would be testing the lows and the highs of this area back here between November and January. So that between 80,600 to 98,000. That would be a ideal range for this. Not this A wave. Maybe even the A wave could hit it. B wave bounce, and then that C wave for that larger degree B wave, which a B wave should be 3 waves. So A, B, C, that's a 3-wave move, and then we could get that rejection. So that would be ideal to see, but obviously B waves, as you can see, just with how weird this B wave was over here, assuming that this A wave already did bottom, I mean, we basically went sideways before heading lower for about I want to say February 12th. I'd say, yeah, about 2 weeks from this low over here, where it kind of took for that sideways B wave. So, and it was a really weird structure to see this as well. So that's just kind of how B waves are. They're a bit more tricky to track. But yeah, other than that, that's pretty much everything for this video. It's the same thing we've really been talking about until we get confirmation that this move up was indeed something more serious. Then we need breaks above those swing highs. But until we don't see that, then it just kind of stays that it is just a impulsive 3-wave move, and that we could be heading lower in that A wave, or possibly a extended B wave as well. So yeah, thanks for watching, and we will see you next time.